Welcome to the second episode of the history of investing. I'm calling it the Alternative Investing 101, the best kept secret. Today what we're going to talk about in the second episode is about the history, which I don't know if you're a geek like me or you'll find this interesting. I totally geeked out when I was researching for this episode, but I think it's really important if you're going to be an investor to find out how it all started. And believe it or not, it actually is recorded back in 1700 BC in Mesopotamia, which is now modern day Iraq, where they had laws and they had debt that was pledged to be able to borrow money. And the severity, if you did not pay, we can't even get into on this. But the history is very interesting. The actual first stock exchange that was the most popular was the one in 1602 from Amsterdam stock market. And it's because it provided a lot of liquidity. And what liquidity means when we talk about that in these three series is it just means money, right? Liquidity, money. And so the Amsterdam Stock Exchange connected investors with business people and allowed the investors to buy equity in the company for money. And so that's how it started. Believe it or not, it is recorded that there was in 1328 in Florence, there was a stock exchange there also. It continued on, but it wasn't as popular, it wasn't as organized as the Dutch did. And they brought that over to America, and that's how it all started the trading. So there's a few different types of investing, if you will. So let's look at the basic. We have the stock market. That's the New York Stock Exchange, the London Stock Exchange, it's the NASDAQ. Nowadays you can go onto a third-party software and just start trading stocks. Believe it or not, 60% of the stocks that are traded on the floor of the New York Stock Exchange are from these real estate investments associations like the Charles Schwabs. And those are just people like you who go online and start trading. And once they get enough trades of a specific stock, they go to the New York Stock Exchange and they trade it and they keep a little bit of a vig for themselves. So right now, the stock market is volatile because you don't have these institutionals, JP Morgans, Goldman Sachs's doing all the educational trades. You just have these people that read the newspaper and say, oh my God, somebody tweeted something, and they just start selling stuff. And that's where the volatility comes in. I didn't want that. And that's why I created the Family Business Fund. That's why I wanted to teach the history of investing, to have people learn that there's other types of investments, Alternative Investment 101, the best kept secret, that's why I call it this, so that you can make an educational decision and make a higher return at a lower risk. And that's what the Family Business Fund provides.